Welcome to the Deep Dive.
Hello.
Today, we're digging into the latest Luxembourg Intelligence News. Stuff that really matters if you're in law, finance, directorship roles, compliance, or, company secretarial work.
Absolutely. We've sifted through quite a bit official reports, announcements to pull out what you really need to know.
Exactly. The aim is to give you a clear and pretty concise rundown of the key things happening right now in Luxembourg's financial and legal world.
And there's definitely a lot happening. You can really see the intensity across regulation, economy.
Mm-hmm.
It all paints a picture of Luxembourg's strategy.
Okay, let's get right into it then. Finance Minister Gilles Roth, he was in London recently.
Yes, just wrapped up a 2-day financial mission there, finished up on May 8th.
Right, May 7th and 8th. And this wasn't just a friendly visit, was it? What was the real objective?
No, definitely not just ceremonial. It was very much about actively strengthening those long-standing financial ties between the UK and Luxembourg.
Especially important now, post-Brexit.
Precisely. Luxembourg is being proactive, reinforcing its connections with London as a major global financial center. The talks with UK Treasury officials like Emma Reynolds really focused on that shared commitment to open markets, multilateralism.
So it's Luxembourg kind of positioning itself, highlighting its stability, its openness for international finance, especially with all the talk about European competitiveness.
Exactly that. It's a strategic move. These high-level meetings show Luxembourg is serious about staying attractive for investors, emphasizing those strong bilateral links and a stable environment.
And I heard there was even a nod to history.
Yes. The minister mentioned the UK's historical support for Luxembourg's liberty. It adds, a deeper layer to that partnership.
Interesting. Okay, let's switch gears slightly. Sustainable finance, Luxembourg's leadership there seems to be growing. What about this Global Green Growth Institute, the GGGI?
Yes, that's quite significant. Luxembourg is set to become a member. And the GGGI president, Ban Ki-moon, was actually meeting with Luxembourg officials recently, which underscores the importance they're placing on this.
And there's that fund, too, isn't there? The Global Trust Fund.
Right, the Global Trust Fund for Sustainable Financial Instruments, launched in 2023, backed by Luxembourg, and it's already mobilized. So get this, over $2.1 billion US.
Wow. USD 2.1 billion for what kind of projects?
Really impactful climate-focused projects, mainly in developing nations. Things like wastewater treatment in Cambodia, climate-smart farming in Uzbekistan, renewable energy down in Namibia, even a debt for nature swap in Ecuador. So pretty diverse.
That's substantial work. And GGGI have a local presence now, too.
They do. They set up an office in Luxembourg back in 2023. It just reinforces this whole partnership. Luxembourg's really showing, kind of outsized leadership in this area.
And this all fits into their national strategy.
Perfectly. It aligns directly with Luxembourg's focus on sustainable finance. It's about cementing its role as a key hub for green finance, attracting investment, attracting expertise.
Makes sense. Now, something maybe more immediate for many listeners. Salary indexation. There's been an adjustment.
Yes, it's official now. Published May 8th in the Memorial A, number 179. It's based on the April CPI figures.
And effective
May 1st, 2025. The new rate for the mobile salary scale, the Cote d'Application, is now 968.04.
Up from what?
Up from 944.43.
Okay, so what does that mean practically?
It means a mandatory 2.5% increase in gross salaries for anyone employed under Luxembourg law.
Right. So higher labor costs for businesses, but also, a boost for employee purchasing power.
Absolutely. And this happens, of course, against the backdrop of ongoing discussions about inflation, competitiveness, things the IMF has also commented on.
So it feeds into that whole national economic debate.
It certainly does. It'll factor into forecasts, wage negotiations, all of that.
Okay, moving on to regulatory matters. DOR-RA, the Digital Operational Resilience Act. There's news on that.
Yes. Another update from the CSSF. They've extended the deadline again for financial entities to submit their DOR Register of Information.
Oh, really? What's the new date?
May 31st, 2025. It was initially April 15th, then pushed to the end of April, now end of May.
Any reason given? Seems like firms are finding it challenging.
Well, the eDesk portal for submissions opened April 1st, using March 31st as the reference date. But the European supervisory authorities, the ESAs, updated some validation rules recently, specifically around technical checks. That likely requires some adjustments.
Right, and DOR itself has been applicable since January.
Since January 17th, yes. It covers a wide range of financial entities. The CSSF has been pretty active, issuing guidance, news circulars, trying to help firms fix common issues.
Staying with the CSSF, there's a major new circular for investment funds, UCIs, Circular 24856.
Yes, that's a big one. Effective January 1st this year. It basically overhauls the rules around managing errors and protecting investors in UCIs.
Replacing an older one.
It replaces Circular 0277, yeah. And its scope is much wider now. It's not just traditional UCIs, and Part 2 funds. It now explicitly covers LTIFs, money market funds, MMFs, UVECAs, USEFs.
Okay, a broader range of funds. What about the types of errors?
That's expanded too. It includes new things like issues with swing pricing, errors in calculating costs and fees, cutoff rule mistakes, investment misallocations, a lot more detail.
So more scrutiny. How do they determine if an error is, well, significant, material?
They've set specific materiality thresholds. For MMFs, it's quite low, 0.2% of NAV. For UCI, it's in retail Part 2 funds, LTIFs, it's generally between 0.5% and 1%.
And for professional funds?
More flexibility there. You could potentially go up to 5%, but you need proper disclosure. It also distinguishes between active breaches of investment rules, making a wrong trade, and passive breaches, like market movements taking you over a limit.
And reporting has changed.
Yes, new notification forms through the eDesk system. And auditors have new tasks too. They need to do sample-based reviews for non-compliance now and issue a special report if there are material errors above certain thresholds, like over 50,000 euros total or 5,000 per investor for UCITES or Part 2 funds.
Sounds like a much tighter framework, more responsibility clarified.
Definitely. It spells out the roles of the management body, the IFM, the fund admin, the depositary much more clearly. The CSSF even published an FAQ back in December to help clarify things. And some reports related to this are already available on their Cicero platform.
This will definitely keep fund managers and service providers busy.
No doubt. It requires pretty robust operational risk management.
Okay, let's touch on AML, CFT, anti-money laundering, and counter-terrorist financing. Any key updates there?
A few things. The CSSF formally adopted the EBA guidelines on MLTF risk factors. That's Circular 25878, building on existing guidance.
Yay.
And importantly, they also adopted the EBA's travel rule guidelines, specifically for crypto assets. That's Circular 25879 under the new EU crypto regulation, MiCA.
So bringing crypto firmly into the AML fold?
Exactly. Plus, they updated the list of high-risk jurisdictions back in February. That's the annex to Circular 22822. And the annual CSSF questionnaire on financial crime went out in January.
So continuous tightening and alignment with EU rules, now covering crypto too.
That's the clear trend, strengthening the framework constantly.
Let's look at the banking sector itself. The ABBL, the Luxembourg Bankers Association, put out their 2024 review. How did the sector fare?
Pretty well, actually. Net profits were strong, up 10% to EUR 7.24 billion.
Wow. And the overall size?
Balance sheets grew modestly, about 1.89%, reaching EUR 937.4 billion. Employment was pretty stable, just a small dip. Number of banks slightly down, 115 from 118.
And ABBL itself is growing.
Yes, 25 new members in 2024, bringing the total to 266.
What's the key message from the ABBL looking ahead?
They're really pushing for smarter regulation. They want to boost European competitiveness, linking it to that upcoming report by Mario Draghi.
Smarter regulation, meaning what?
Well, they're advocating for financial supervisors to have a dual mandate, focusing not just on stability, but also on competitiveness. It's a common call from the industry.
Interesting point. Now, what about the view from outside? The IMF assessed Luxembourg recently. What were their main points?
The IMF sees a GDP rebound coming into 2025 through 2027. But they also forecast a temporary inflation spike next year, 2025, mainly because those electricity price controls are being phased out.
Any concerns?
Yes. They cautioned about the government's expansionary fiscal policy, projecting a widening deficit in 2025. They're recommending more fiscal prudence, winding down support measures, and maybe setting up a debt anchor with a clear fiscal rule.
What about risks?
Downside risks they highlighted include weaker external demand, potential financial market volatility, and ongoing challenges in the real estate sector.
And structurally?
They pointed to familiar challenges, competitiveness, housing affordability, labor supply issues, and interestingly, they noted rising household debt, particularly the high debt service-to-income ratio on new mortgages.
Did they suggest any remedies for the mortgage debt?
They recommended looking at income-based measures to limit indebtedness and perhaps gradually reducing the maximum loan-to-value ratio.
So some caution signs from the IMF despite the positive growth outlook.
Yes, a balanced view with clear recommendations for managing risks.
We also had an update from the Minister of Finance, Jill Roth, on the state's finances.
Yes, he presented an update to parliamentary committees covering the first quarter, up to March 31st, 2025.
And the news was?
Generally positive. He highlighted positive revenue dynamics in Q1. This is all happening while the 2025 state budget and the multi-year financial plan are still going through the legislative process.
So revenue's looking okay for now. Good to know. What about general corporate law or governance? Any big shifts there?
No major sweeping corporate law reforms highlighted recently. We did note the nomination of Mrs. Lynn Frank to the Conseil d'État, which plays a key consultative role in legislation.
But governance is still impacted by all these financial regulations.
Oh, absolutely. Things like DORA, MICA, the AML updates, that new CSSF circular on UCI errors, they all heavily influence corporate governance practices within financial institutions. Compliance burdens increase, boards need more specialized expertise. It's an indirect but very significant impact.
Makes sense. And there's a new initiative tackling fraud.
Yes, a national anti-fraud working group was set up late last year, December 2024.
Who's involved?
It's a collaboration. You've got the ABBL, their Foundation for Financial Education, the House of Cybersecurity, CSSF, the Central Bank, BCL, the Telecom Regulator, ILR, and Be Secure.
Quite a coalition. What are they planning?
A national public awareness campaign is planned for this year, 2025, to help combat financial fraud.
Good initiative. We also saw an update related to outsourcing.
Yes, Circular CSSS 222-806 on outsourcing was amended by a new one, 25883, just recently in April, effective May 5th.
Why the amendment?
Mainly to align it with DORA requirements. It ensures consistency. Interestingly, its scope now seems broader, potentially covering entities not directly subject to DORA itself.
And it covers both business process and ICT outsourcing.
Correct. And the specific clauses previously dealing with cloud computing have been removed, as that's now comprehensively addressed within the DARA framework itself.
Okay, so streamlining the rules there. Let's look at the investment fund sector trends. What's happening on the ground? ALFI, LPEA.
Well, ALFI, the Fund Industry Association, had a roadshow in the U.S., New York, and Chicago just this week, May 6th and 8th. Discussions there included the impact of AIFMD2.
And LPEA, the Private Equity Association.
They published an interesting piece, VC Strikes Back, suggesting the European venture capital market might be recovering in 2025.
What's driving that potential recovery?
And they point to things like cooling interest rates, a lot of dry powder, meaning capital waiting to be invested, and maybe an uptick in valuations. Hot sectors mentioned were AI and fintech DeFi. They also highlighted the role of the EIF and the LIFT incubator.
LPEA has been active elsewhere too.
Yes, seminars in Amsterdam and London recently. And they had a PE Tech Day, focusing on that intersection of private equity and technology.
What are the key trends coming out of those PEVC discussions?
Big themes include ESG reporting burdens,
Yeah.
the use of AI in due diligence and valuation, the so-called democratization of private markets, but also ongoing fundraising challenges.
It's a complex picture, and LPEA itself has been growing.
They expanded their team back in January, yes.
What about fund finance? That seems to be a hot topic too.
It is. The Fund Finance Association, FFA, and ALFI are actually holding an event here in Luxembourg soon, May 21st, specifically on fund finance trends,
What kind of trends?
covering the whole spectrum: subscription finance, hybrid facilities, NAV-based lending, and increasingly ESG or sustainability-linked loans for funds.
So lots of innovation in how funds get financed. Do we have the latest overall asset figures for Luxembourg funds?
Yes, the CSSF released the figures for the end of March 2025. Total net assets under management in UCIs stood at EUR 5,749.779 billion.
How does that compare?
It's actually a decrease from the end of February 2025 when it was EUR 5,957.264 billion. So a bit of a dip in March, market fluctuations likely.
Finally, any quick administrative or tax updates we should mention?
So just a few practical points. 2024 tax declarations can be filed via myguichet.lu since April 7th. There was also a survey out in March asking for feedback on improving the tax declaration process.
Always good to see efforts to improve bureaucracy.
Indeed. The tax authority, ACD, also had a public info stand recently. And there's a new public petition asking if people can file their 2025 tax returns earlier next year, starting February 2026.
Interesting idea. Anything else from the legislative side?
The Chamber of Deputies agenda for the week of May 5th was quite packed. Electoral law reform, infrastructure projects, international agreements, nature protection laws, labor code changes, affordable housing, the usual busy mix.
And one slightly unusual regulation.
Ah, yes, a ministerial regulation, A178, popped up in the memorial on May 8th. It prohibited operating drones in Luxembourg City and Esch-sur-Alzette on May 13th and 14th, 2025. Specific event-related security, most likely.
Right. Okay, that covers a lot of ground.
It certainly does.
So wrapping this up, it's clear, isn't it? Luxembourg's financial and legal scene is incredibly active right now. For you, our listener, the real takeaway is just the sheer volume and importance of all these regulatory changes and strategic moves.
Absolutely. Staying on top of this, adapting. It's just crucial if you're working in law, finance, governance here.
This period really highlights how dynamic Luxembourg is as a financial center. It definitely raises questions, doesn't it? How do you balance all this regulation with competitiveness? What are the real opportunities and maybe the challenges in sustainable finance and all this tech innovation?
Good questions. Things for professionals to really think about. How does this all impact your specific role, your organization's strategy? It's a constantly shifting landscape.
Luxembourg Intelligence News.
Hit subscribe for more in-depth analysis.